here, and welcome back to another video. I'm just going to explain a little bit about A&A Capital and how you can avail of our services before we dive into the video. So this is our website. You can just go into aacapitalltd.com and you can read about us over here. And one of the main features that we have is we have a free public channel for all the people that are interested. So all you do is you just go back and you just click the Telegram button or the phone, whichever you prefer, and then click allow, and then that will bring you to our Telegram group. Now, you can also read about us. You can also read about why you would like to choose us. You can see our services. So we offer all these services, including trading and education. And if you have any queries, you can drop us a message. Our WhatsApp links are here, our email is here, and our Telegram is here. Make sure to follow it for the educational content on there as well. And if you would like to purchase any service, so for example, if you want to go to our trades journal or if you want to read more about it, just go on here and you can read about what's on offer. You can also purchase our Forex course through this button and our mentorship. So we offer one-to-one mentorship to any clients that are interested. Have a read about that and you can purchase it over here as well. If you want to read about getting affiliated with our company, then you can have a read and fill out our form and we'll get back to you as soon as possible. And then have a read of our reviews as well. So we have our reviews over here. Have a read of those from clients, and then you can decide yourself if you're interested as well. Hope this helps. Now let's get to the video. So today's topic is why about 97% or 99%, different figures from different people, why the majority of traders lose money. The majority of these traders are retail traders. So I'll be discussing these retail topics and how they are manipulated as to how the banks, the big institutions, trade. So at A&A Capital, we do trade according to the banks. So I'll explain a certain topic today that is part of our A&A intraday strategy as well as our A&A Apex strategy. So that is the topic of liquidity. Sorry about that. So to explain the topic of liquidity, I'll use three pairs. I'll use the cable or GBPUSD. I'll use the pound yen, and I'll use the pound New Zealand. So let's start off with GBP JPY or pound yen. So this is a trade that I'm looking at for the coming week. Now, why am I looking at this for the current week? This is the first thing that I do for every single trade. Every single pair that I analyze, I always look at where is liquidity resting. Well, over here, we took sell side liquidity before pushing up. Now, what does that indicate to me? That means this is sell side liquidity. What does that mean? Well, it means that we have sell stops protecting the current buyers. There's buyers over here, right? There's an equal low, or in the retail world, we call that a double bottom. Now, that is an area of liquidity. Why? Because that's where retail traders are buying. They see support level, they see double top, they see hammer candles. They're buying over here. Then you see this massive move down. That's called institutional manipulation. They know retail traders are buying. Now, here's where the concept of liquidity comes in. So we have buy orders being filled by retail traders. They're buying at the moment. Where do they have their stop loss? They either have their stop loss protected below the equal lows, or the conservative traders have it below the next structure level. Now, institutions know that. They can see orders coming in. So what do? They manipulate it to grab these buyers' stop losses. Now, what retail traders do is they protect their stop losses. How do they protect their stop losses? Well, they have sell stops and buy stops. In this case, what they believe is if there's a structure break, the price will continue downwards. Now, if you're a retail trader, you know you have done that before. Support turns to resistance, etc. So they have their stop losses. Buyers have their stop losses here, and sellers have their sell stops to protect their buy position. Institutions know that and they manipulate it, and then we see the real move happening. Now, I talked about equal lows over here. Well, why am I looking to go long? I'm looking to go long because on the 4-hour time frame, we can clearly see equal highs. There's a lot of sell orders by retail traders happening here. That's all sellers. Why? Because we see equal highs. In other words, a double top, a retail double top. So what are retail traders doing? Well, they're selling. Another region of liquidity is a trend line. So I'll talk about that later on in future videos. But over here, we can also see a trend line break. So what are retail traders doing? They're selling. What do buyers do? What do institutions do? They see that upon the break of this structure and on the break of the trend line. What do we see? Manipulation above this structure, which is labeled as previous weekly high that we'll be targeting when we look to go long. So essentially, what are retail traders doing? They're selling because there's a retail resistance over here. There's a double top over here. You can consider that maybe a triple top, whichever you prefer. Trend line break. So retail traders are selling. That means what are institutions doing? Institutions are looking to buy. They don't want to go on the same side as retail traders. So that's why I've labeled this as institutional order flow is bullish. Why? Because there's buy stops above the structure high over here. This is a structure high, and there's also equal highs above the structure high. So we're looking to go long. So to hone in on this topic of equal highs, again, what is happening? Why are institutions looking to target these equal highs? Well, because the retail traders are selling there. If retail traders are selling there, what does that mean? That means that they have their stop losses above the equal highs, and they also have protective buy stops to protect their sell orders in case their sell order doesn't work. They have their buy stops just in case price continues to go higher. So that's why liquidity is what we use as target. Equal highs, structure highs, they're what we use as liquidity. Now, over here, these are called short-term lows and short-term highs. This is a short-term low. There's liquidity resting here. Why? Because all these existing buy orders, because they see maybe a double bottom, they don't realize that there's a trend line. There's a double bottom here. People are buying. That's called a short-term high because it's not a significant piece of structure. Again, there's liquidity resting here because either the buyers have moved their stop losses below this structure short-term low, and there is also buyers that are getting in just there because of the double bottom. They have their stop losses here and they have their sell stops resting there too. So what institutions do is they move price in the favor of what the retail traders look to do and take those retail traders out. That's what we call liquidity, and it favors the position in which the institutions want to move price. And then the original move happens after the retail traders have been taken out. So in this case, double bottom at a level of support. Retail traders look to go long, institutions manipulated it, and then price went higher. So the real move happened after the retail traders were taken out. So why am I looking to go long here? Because there's equal highs here. That's why institutional order flow is bullish. We've determined that. Then we see an order block, etc., and we look to go long. So that all this order block, etc., will be explained in future videos. So yeah, I'm looking to go long around this price level once we get our A&A Supreme confirmation on the 1 minute time frame, which will probably give us a stop loss of maximum 2 pips. I'll look to go long from this order block, 5 minute order block that I've labeled previously. But yeah, hope this makes sense as to why the equal highs are looking to be targeted in the coming week. Also explained on the pound dollar. So this is a very annoying trade that just happened to us at A&A Capital last week. So we were looking to go long here. It's probably better on the 1 minute time frame. So yeah, we got our A&A Supreme confirmation once we tapped into our bullish order block. So what happened was we got our confirmation here. We were looking to go long over here, but then our stop loss was a little bit above 2 pips, which didn't really make sense. So we didn't enter the trade because we look for a minimum risk quite a high risk to reward. Eventually our stop loss did come down less than 2 pips, and we were just about to enter, typing it in for our clients, and then price shot up. So because we had a stop loss of about 1.5 pips, that means that this 3 pip move, that was a very quick, probably 3 risk to reward done there. So that's why 3 are late. That would have just ruined our risk to reward to less than 1 to 20, which is why we didn't look to take this trade, because it wasn't worth it in the end. But yeah, I guess it's just timing. Pound dollar just moved up very fast, and it's currently sitting, if we got in on time, we would be sitting above 30 risk to reward, which is 50, almost 50 risk to reward, which is a bit annoying, but happens. We look to get in anyway on another trade as well. So let me explain why we were looking to go long. We were looking to go long because we can see equal highs again. Over here we see equal highs. Again, that's in confluence with another resistance level. So what is happening over here? We have over there, sellers are selling. If price comes up, sellers will be selling again. What will institutions do? They will manipulate it, because there's protective buy stops over here, taking out the money, taking out the sellers' stop losses and triggering the buy stops. So retail traders lose money in both ways. So if we look at the pound New Zealand, there's another trade, because there's equal lows over here. So what is happening over here? There are buyers. All these are buyers. There were equal lows here. Buyers were buying. Again, institutions manipulated that. Buyers will be buying. All this is retail support. So that's why we're not looking to enter the trade as buyers. We're looking to enter the trade as sellers with the institutions to manipulate the retail traders. So equal lows are over here. That's why we will be looking to sell, because over here we have buyers buying. Stop losses are resting below the equal lows. What is also below the equal lows? Sell stops to protect the buy positions of the retail traders. And then the institutions will manipulate it like this, bring price down, break structure to get the buy stops introduced of the retail traders, then manipulate it below their equal lows to take out their stop losses. Then we see the real move, possibly to fill this imbalance that's resting over here. Again, all this will be explained in future videos, but hope the topic of liquidity helps. Remember, short-term highs, short-term lows, and equal lows and equal highs. These are all retail topics that you can use to determine where institutions are looking for price to go. Then you can get in with your minimum risk to reward and your entry criteria being filled. But hope this helps, and we'll see you in future videos. Thanks from A&A Capital.